Have you considered investing in buy-to-let properties? It may not be a wise choice anymore. By 2026, new regulations could impact your investment. Let's dive into why buy-to-let may be dead by then. Buy-to-let is a property investment strategy. Investors buy properties to rent them out. Traditionally, it offers steady income and long-term growth. However, recent trends indicate a shift. In 2026, several key changes will affect buy-to-let. First, tax implications will tighten for landlords. Increased taxes reduce profit margins significantly. Second, stricter regulations on rental properties are expected. Compliance costs can eat into rental income. Let's break this down further. Property prices have skyrocketed recently. This means higher mortgages and less potential profit. Additionally, potential tenants face rising rents. Many cannot afford these costs and will seek alternatives. Consider alternative investments. Instead of buy-to-let, explore stocks or REITs. These options may provide better long-term returns. They also require less maintenance and hassle than property management. For example, take Sarah, a buy-to-let investor. She once earned steady rental income. But, with regulatory changes, her profits shrank. Facing stiff competition, she found it hard to raise rents. Sarah eventually shifted her strategy to diversify her investment portfolio. In summary, buy-to-let is facing significant hurdles by 2026. Tax changes, rising costs, and alternative options challenge this investment approach. Perhaps consider other avenues that align with future market trends. If you found this insight valuable, subscribe for more content like this. Join us as we explore smarter investment strategies. Have you considered investing in buy-to-let properties? It may no longer be a wise choice due to potential new regulations by 2026 that could affect your investment. Buy-to-let is a property investment strategy where investors purchase properties to rent them out, traditionally providing steady income and long-term growth. However, recent trends suggest a shift in this approach. By 2026, key changes will impact buy-to-let investments. First, tax implications for landlords will tighten, reducing profit margins significantly. Second, stricter regulations on rental properties are anticipated, leading to compliance costs that can diminish rental income. Property prices have surged recently, resulting in higher mortgages and reduced profit potential. Additionally, rising rents are making it difficult for many potential tenants to afford housing, pushing them to seek alternatives. Consider exploring alternative investment avenues. Instead of buy-to-let, options such as stocks or REITs may yield better long-term returns and require less maintenance compared to property management. For instance, take Sarah, a buy-to-let investor who previously enjoyed a steady rental income. With regulatory changes, her profits dwindled, and competition made it challenging to raise rents. Consequently, Sarah diversified her investment portfolio. Buy-to-let is encountering significant challenges by 2026, including tax changes, rising costs, and the emergence of alternative investment options. It may be wise to consider other avenues that are more aligned with future market trends. If you found this insight valuable, subscribe for more content like this as we explore smarter investment strategies. Consider examples like John and Emily, who both invested in buy-to-let properties hoping for steady rental income. John faced rising property taxes and found it increasingly difficult to keep up with maintenance costs, leading him to sell his property. Emily, on the other hand, experienced a downturn in the rental market and could not raise rents due to tenant affordability issues, prompting her to pivot to dividend stocks instead, which provided her with more reliable returns without the headaches of property management. These cases illustrate the challenging landscape for buy-to-let investors as the market evolves. Have you evaluated the prospect of investing in buy-to-let properties? Current indications suggest that it may no longer be a prudent option, especially with anticipated regulatory changes by 2026 that could significantly affect your investment. Buy-to-let, a property investment strategy where investors acquire properties to lease them out, has traditionally offered consistent income and long-term capital appreciation. However, recent trends indicate a potential shift in this model. By 2026, several crucial changes are projected to impact buy-to-let investments. Primarily, tax regulations for landlords are likely to become more stringent, which could lead to reduced profit margins. Additionally, more rigorous regulations regarding rental properties are expected, likely resulting in increased compliance costs that could further erode rental income. Moreover, the recent surge in property prices has led to higher mortgage costs, diminishing profit potential. Simultaneously, prospective tenants are facing escalating rent prices, pushing many to consider alternatives. As such, it may be beneficial to explore alternative investment opportunities. Options such as stocks or real estate investment trusts, REITs, might offer more favorable long-term returns and generally require less involvement than property management. For instance, consider the experiences of Sarah, John, and Emily, all of whom ventured into buy-to-let investments seeking reliable rental income. However, due to regulatory shifts and market pressures, Sarah opted to diversify her investment portfolio, while John faced mounting property taxes and maintenance costs, leading him to divest his property. Emily, likewise, encountered challenges in the rental market and pivoted to dividend stocks, achieving more stable returns without the complexities of managing rental properties. Buy-to-let investments are likely to face significant obstacles by 2026, stemming from tax reforms, rising costs, and the viability of alternative investment options. It may serve investors well to consider other paths that better align with evolving market trends. Like, subscribe, and click the bell so you never miss an episode.